On the eve of the Reserve Bank's interest rate decision, most of the data suggest Australia's economy is yet to rediscover its mojo. The extreme weather earlier this year looks to have taken the wind out of the jobs market, with today's numbers the weakest since the global financial crisis. But the Reserve Bank is unlikely to be deterred from its number one goal, managing a mining boom which has yet to materialise fully. Earlier, I spoke to our finance correspondent, Philip Lasker. Well, Phil, I've got to say, since those last week March quarter GDP numbers, we're not seeing much data supporting the Australian economy bouncing back strongly, are we?
No, we've had weak data on credit growth, housing, things of that nature. And today we saw job ads fall for the second month in a row. That's only happened, well, the last time it happened was in mid-2009, 2 years ago. Job ads fell in May 6.5%. And, you know, given the economy's very soft in some areas, even though we had strong retail sales figures recently, retail sales have been quite weak. We've seen the Australian dollar affecting manufacturing. So people are wondering whether this is a sign that some parts of the economy are extremely weak or even going into recession. I spoke to the ANZ, Ivan Colquhoun, and he says he's not worried by these numbers.
Remember, we had the very late Easter this year. Anzac Day was straight off the back of that. I think when we look really into the data, we can see some weakness in the first few weeks of May that didn't persist into the latter 2 weeks, but it was still big enough in those first 2 weeks that it really depressed the numbers for May overall.
But they will be worried if this weakness extends another month. But they say that the mining boom will help the economy and these numbers bounce back.
Puts an awful lot of faith in the mining and the mining boom continuing, carrying everything forward.
Certainly the Reserve Bank and Treasury, they're all telling us that they expect the mining boom to create jobs, not just in the mining sector, but throughout the economy. Sydney University's Workplace Research Centre has done some work on the type of jobs that are being created in our economy. They say we're putting too much faith in the mining boom. They say we're not looking at underemployment, for example. If you add underemployment with unemployment, you get a figure something like 12% of people who are not really able to work to the extent that they would. And Dr. John Buchanan of the Workplace Research Centre says the mining boom won't necessarily improve that situation.
If you lose a job in manufacturing, if you lose a job in education, especially higher education, these were jobs that offered some kind of stability, some capacity to plan for the future, some chance of career progression. The jobs that are coming through in the rising sectors often have irregular hours of work. In mining, require fly-in, fly-out, and often don't attract the usual entitlements, say to paid leave, that people usually associate with quality work. So yes, there will be some new jobs coming through, but they're not going to be like the jobs of the past, and they are the kind of jobs that many people will in fact regard as of lower quality.
Now, just speaking about the future, the very near future, and tomorrow's Reserve Bank move on interest rates, or are we going to stay as we are?
Well, there are some people suggesting that they may put up rates tomorrow. I think they'll probably wait a while after such a weak GDP number and a run of weak numbers. They probably want to see that the recovery or the bounce back that everyone's expecting has consolidated to some extent. But those that feel the Reserve Bank can move as early as tomorrow to raise rates are looking at that mining boom, suggesting that the Reserve Bank has to be proactive about these things. They're looking at inflation. They feel that inflation has bottomed and the only way is up.
Well, what an extraordinary amount of optimism. I mean, aren't we also looking at the US as well? And we've had the stimulus come through now, and we've got dreadful numbers coming out of the US economy at the moment.
If the US continues to show weakness and continues to go backwards, then people really will start to be concerned. But at the moment, they can explain all that away. And I suspect the Reserve Bank isn't going to start to worry about what's happening overseas just yet, and will signal that whatever plan it has for interest rates, that hasn't been disrupted.
Philip Lasker, thank you very much for coming in.
Thanks, Tiki.